It never fails that at least once a day I'm asked where the economy and the market is headed. My answer is, gee, I'm sorry, but I have no idea. It's really not my thing. It's bad enough that I don't know where the markets are headed, but it even confuses people even more when they know that I don't even care. You see, my main focus is to help people make smart decisions about their money so that they can build and protect their wealth over time. This work does not really require me, or really anyone, to know what the market did today or where the market is going into the future. But one thing is constant. I love stocks, bonds, and cash. But most importantly, I'm not overly bullish over one over the other. What I'm indeed bullish on is proper asset allocation. And there's abundance of truth stating that you need all three, stocks, bonds, and cash, to be a successful investor. And you need them all of the time. Now, I don't have a crystal ball into the future, and I have no idea where the economy and stocks will be going tomorrow or the next day. But I do know for certain that things will either get better, things will be worse, or maybe they'll stay about the same. You see, economists and talking heads always have an answer, but here's my take on the whole thing. Let's take a look at some advantages and disadvantages of owning stocks and bonds today. Some advantages for holding stocks today is, well, there are some signs of recovery in our economy. Number two, well, over time, stocks have always performed well. And number three, it's an election year. Now let's take a look at why it's bad to own stocks today. Well, the economy really is not doing that great. Number two, if you can agree with me, government has gone absolutely crazy. And number four, well, 2008 was really bad. So people got burned for owning stocks. Now let's take a look at why it's a good reason to own bonds today. Well, the Feds have held bond prices steady. Number two, bonds are always a safe haven for those that are worried. And number three, income from bonds is always appealing. Now let's take a look at why it's a bad reason to own bonds. Probably today and any day. Bond prices are artificially supported by things that the Feds have done. Now yields now are historically low. So when yields increase, bond prices will decrease. And number three, bonds always underperform inflation. You get this picture? Well, really neither do I. You see, the more we worry about the market, well, the more we worry about the market and the more we think that it really matters. It's important that investors stop trying to predict the future and take a more active role at understanding their behavior, especially with their investments. Use this knowledge to pick the appropriate asset allocation and have a proper plan in order to move closer and get to your goal. You want to implement that plan and allocation in your portfolio, and you want to rebalance that portfolio consistently over time. Then you ride out the storms. There'll be good days and there'll be bad days, but you want to enjoy life and enjoy the good weather in between. But whatever you do, don't panic. Don't speculate and gamble on a single asset like a specific stock, bond, gold, cash, real estate, or something else. Now, as the title of the video states, and I promised, let me make my prediction for the top investment pick of the future. Again, as I gaze into my crystal ball, here it is. Number one, asset allocation will always continue to outperform any other strategy out there. Sure, there will always be times when folks will bet the farm per se and get lucky on something that beats the market. But this is always based on hindsight. Number two, lower your expenses in your portfolio, the more you'll continue to outperform high expense funds. And number three, investing in index funds, or better yet, structured indexing, which this is called passive investing, will continue to track the market's performance and beat active investing or stock picking over time. Guys, thanks for tuning in. See you next time on Financial QB TV.